All right, guys. Today we're going to talk about Fibonacci. Going to talk about Fibonacci and pretty much y'all. Fibonacci is pretty much let's see, how can I say this in layman's term? Okay, we'll do area of ratio where the market finds structure. All right. Area of ratio where the market finds structure. So there are a couple of things I want you guys to know when it comes to Fibonacci. The main fibs I want you guys to be focused on is 38.2, 61.8, 78.6, 88.6. Okay, these are your main fibs. Okay, so we use the fib tool to, like I said, structure is the main thing that we focus on when it comes to trading. But without the naked eye, another way to know where structure is currently at is using the Fibonacci tool. Today, we're just going to talk about what these numbers do. I'm not going to get into like the whole trading view and show you guys how Fib works. I just want to break down the basics first. At least you guys get the understanding before the next come Monday, we'll actually show examples of real life Fibonacci. But these are the three numbers: 38.2, 61.8, 78.6, 88.6. So these are area of ratio where the market finds structure. So within these fibs, right, they look like this. The fibs look like this, right? It's a tool that gives us accurate support or resistance. Okay, it gives us accurate support or resistance. So you might see 38.2 here, right, in one of these ratios. You might see 50%. All right, you'll see 61.8. 78.6. Also, you see numbers like 23.6. You see 88.6. And 100%. And put 0%. Gotcha. So anytime, like, this is what my fib setting looks like, right? But the main fibs I need you guys to focus on is 38.2, 61.8, 78.6, and 88.6. These are your main fib levels. Okay. So anytime price, so pretty much these fibs, right, are true support and resistance. So fibs are true support and resistance. Like, obviously, the foreign exchange market moves in algorithms. And anytime price gets to 38.2, 61.8, 78.6, 88.6, there's always some type of reaction. Okay. There's always some type of reaction within the market. And that's what we're going to discuss today. We're going to discuss pretty much what happens when price gets on these levels. What should we expect to see the market do when price gets on these levels? Let me get this thing right. One second. All right. So pretty much when drawing your fibs, one second. Okay, before I explain these numbers, let's just talk about quickly how to draw these fibs, right? Anytime we're in an uptrend, right? When we're in an uptrend, right? When we're in an uptrend, when we're drawing the fibs, we always start our fibs. Your fib starts from high low and drag it up to the higher high. So pretty much when you're drawing your fibs on an uptrend, start from the high low, right, to the higher high. So pretty much the high low would be on the fib level, it will show 100%, and the higher high will show 0%. So if we look up here, right, your high low would be at the 100%, and your higher high would be at the 0%. So pretty much the purpose of this fib is to track where the next high low is going to be, right? That high low can fall. That high low can come to 23.6%. It can come to 38.2%. It can come to 50%. It can come to 61%. It can come to 78%. It can come to 88%. It can come to 100%. Okay. And just based on what we've learned, what do you guys think is going to happen if price comes below 100%? Like if price came and passed 100%, what can we say about this trend? If price comes all the way down, and we're tracking this next high low, but if price comes and breaks the 100% on the Fibonacci, what can we say about the trend?
It's broken structure?
Absolutely. Structure is broken, right? Structure is broken. Good job, Ashley. That means structure is broken. So the Fibonacci helps us, the Fibonacci tool helps us gauge where that potential high low can potentially go to. Write this down, okay? When price, right, finds support at 23.6, right? If for example's sake, if this was 23.6, right, on this right here, this is not structure. When price lands on 23.6, it is not structure, right? Your main fib levels and structure levels are anything 38.2 and below. So if price came to 50%, it will be considered structure, right? It will be considered structure, but it's not our main, it's not part of our main fib level, because in our main fib level, there's something that happens. Price reacts a certain way within these numbers. So if we were in an uptrend and price landed on 50%, right? It's a valid structural pattern. If price lands on 23.6, it is not a valid structure pattern. If price lands on 38.2, it is a valid structure pattern. If price lands on 61.8, it is a valid structure pattern. If price lands on 78.6, it is a valid structure pattern. If price lands on 88.6, it's valid. If price lands on 100%, it is valid. But the main fib levels are 38.2, 61.8, 78.6, and 88.6. So within these green lines, this main fib level, price reacts a certain way. It does something, right? It tells a story to let us know that, all right, we're at a main fib level. So anytime price lands on 23.6, it is not a valid structural level. Okay, remember that. But there's something that happens when price lands on 23.6. Anytime price lands on 23.6, you will see a lot of consolidation, right? Price is just going to consolidate. So anytime you're looking at any type of pair and you see consolidation, that is probably a 23.6 fib level. So there are two things that happens, right? And 23.6, price may price will consolidate, or we can see continuation, right? Continuation. This is what you see in 23.6, right? So what does that look like, right? You might see price doing this, just consolidating. Okay. Consolidating, or we might see continuation. All right. 23.6, consolidation or continuation. Right. 23.6, not a structural level. Right. Price only becomes a structural level once we 38.2 and below. Not a structural level. All right, so down here, all right, when price got down here to 23.6, we might see consolidation or continuation. That doesn't mean that this 23.6 area is a high low, right? Because what can happen is, if price did create a high, right, all we're doing is the fib is the 100% is still at the high low. All we're doing is dragging the 0% up to the next high, so we can eventually track our structure level. And the goal is to get this to 38.2 or below. So you might see situations where we're in 23.6s, right? Price is in consolidation, is doing continuation, but we still need to track our next high-low position. So while you're trying to track the next high-low position, you have to consistently keep moving the 0% to the next high, as long as it's creating 23.6%. Okay. When price lands on 38.2, you're gonna see a strong impulsive move. Okay. You see a strong impulsive move. What does that look like? So if price came down like this and lands on 38.2, you typically see a strong impulsive move, similar to this continuation. Right? Continuation, let me it doesn't necessarily have to be impulsive. Continuation would be, it'll just be like, it might consolidate a little bit and then continue up. Okay, 38.2 is once it lands on 38.2, obviously we treat these Fibonacci levels like true support and resistance. You want to see seller's exhaustion, and typically once you see seller's exhaustion, that's how you know it's probably found its support at 38.2. Once that happens, you will see a strong impulsive move, right? So, for example, if this was 38.2, right? This now becomes officially a high low. It now becomes a structural level, right? It's a structural level, meaning if price were to break, if price were to break 38.2, in most cases, structure is broken from an uptrend to a downtrend. Right? In most cases, structure has broken from an uptrend to a downtrend, meaning this is the last high low. Okay. When price lands on 61.8, well, let's do 50%. 50%, price is just gonna act normal. If it finds support here, it's just gonna, not really anything. It's just gonna create, you know, if it finds support on 50%, it's just know that it's a structural level. Structural level. Okay. Structural level. Okay. When price lands on 61.8, this is where price starts creating market patterns. All right. What type of market patterns? All right, you may see, if we're buying in this case, you may see a double bottom, triple bottom, or inverted head and shoulders. All right, and this is a structural. Okay. So what do those patterns look like? You might see a double bottom, looks like a W. You might see a triple bottom, right? Or you might see a inverted head and shoulder, right? See the head, left shoulder, right shoulder. So these are some things you may see, and obviously when price create these patterns, it's just gonna trend back up, right? It's just gonna trend back up. Okay, just know anytime price lands at 61.8, you're gonna see some type of market pattern, either a double bottom, especially on the uptrend, and everything here on the downtrend is just the inverse. So on the downtrend, you see double top, triple top, head and shoulders, right? But in this example's sake, you see a double bottom, triple bottom, inverted head and shoulder. And most likely you see continuation to the upside. You see continuation to the upside. Okay. Same thing happens, right? We'll put this like this. Same thing happens on 78.6. Is the same thing. You see the same thing on 78.6. Some type of market pattern. Double top, double bottom, triple bottom, right? Excuse me, double bottom, triple bottom, invert. You see the same thing on 78.6. When price gets to 88.6, you'll see you just see a slow trend to the upside. When price finds support at 88.6, it'll just be a slow trend to the upside. It might come back down. It'll take a while to move up, right? So 88.6, slow trend, structural. Okay. When price lands on 100%, this is pretty much, you want to just, if price lands here and finds support, just risk it. Just risk it. Put all your eggs in one basket. Quote unquote, lot up. Go with a bigger lot size, over leverage a little bit, right? But you have to know that price has found support on that level. Okay, because we know this is the last, 100% is usually always the last high low. So if price is failing to break the last high low, be more aggressive with your entry, right? With your lot size, because at the end of the day, your confirmations tells you that it's not going to break the previous high low. So why not just put all your eggs in one basket, put a tight stop loss and risk it, as opposed to putting a large lot size on 38.2. If you put a large lot size on 38.2, guess what? You have all this room right here that price can retrace to. Okay, so let me make this clear. When price finds support at 38.2, right? When price finds support at 38.2, sometimes you may see situations where right, if price came here, found support is 38.2, you might see situations where price may not even, it might not even have a strong impulsive move, right? It might keep trending down, right? It might keep trending down, might trend down to 61.8, right? It might create patterns in 61.8, but it may not have enough buyers in the market to push it up. So it might come to 78.6, right? If enough buyers aren't coming in, it might come to 88.6 and then possibly find its support and slow trend up. So you just have to understand that every time price lands on these fib levels, it doesn't necessarily mean that just because price landed on 38.2, right? We need to see impulsive moves. Sometimes, right, it might just break below 38.2 and go to 50%. Right? Sometimes it might find support in 50% and go up. Sometimes it might not find support. It might find support in 50% and break lower to 61.8. So the question is, all right, well, how do we know, right? How do we know it's ready? How do we know it's found its structure in these fib levels? This is where we add in those change of character that we explained in the last videos, right? Change of characters. You start seeing change of characters in 38.2. That's a sign that it's found support, right? It's found support on 38.2. You start seeing change of character on 61.8, right? That's a sign that, okay, maybe we found support. But there are instances where price would change character in 38.2, right? Price would change character in 38.2, right? And and then it come down to 61.8. And this goes back to our videos when I was talking about swing high and swing lows. Okay, swing high and swing lows. And I don't want to dive too much in that because that will confuse you guys. We're just gonna keep it basic. So I just want to introduce you guys to the fib levels and what happens, but it gets more challenging, you know, when you add the swing highs and swing lows, because just because we had a 38.2 down here as a high low, in some cases doesn't mean, right? For this example, obviously this was the low that broke this high. Right, this was the low that broke this high in this example. But you might see situations, guys, where it looks like this. Where it looks like this. You might see situations where it looks like this. How do I want to do this? Let me see. Okay, let's do it like this. Boom. So you might see a situation when it looks like this. All right. Right? You might see situations where it looks like this. I don't like that. Right? Where price created 38.2, right? 38.2 here, which will technically be a high low. Right? Which would technically be a high low. Right? And then you find it come, you know, you'll see a change of character happen right here in a smaller time frame. You thinking that price is about to go up, then this happens, right? Another change of character happens here to give us a steeper, right? If this was our 100% now, right? This was our last high low. This was our 100%. To give us a steeper retracement, which probably this was, let's say 88.6. Right? If this was our 88.6. See, most people get played by the market when learning Fibs because they think this 38.2, right? When this 38.2 was the swing low, right? They would think 38.2 was a swing low that broke this high, but in reality it was 88.6 because it was the swing low. It was lower than 38.2. It was a swing low that broke this high. Now, people may get confused that when price finds support at 38.2, change of character after 30.2, and we did get a nice little buy momentum. People may get confused and think that a break of structure happened here, right? They might think a break of structure happened here because this was the last high low, quote unquote, in fib terms, right? And as far as our main fibs, as far as structure level, they might get confused and think this 38.2 is a high low, but in reality, all price was doing was just creating a steep retracement, quote unquote, a true swing low. So I say that I gave this example. Don't get confused while using the fibs, because at the end of the day, you still want to identify the swing low that broke the previous high. Right? So when traders learned about the fib ratios and when they learned about swing highs and swing lows, they use this to their advantage to take advantage just buying and selling the market, right? So what they'll do, if price lands here, they will still treat this 38.2 as if it was the swing low that's going to potentially break this high. So what they're doing is they're buying, right? They're making money, buying. As soon as they see, price reversing, they might get out the market and be like, what's going on? So right there is they're now saying, okay, well, maybe 38.2 isn't the fib level that price is looking to find its swing low from. Maybe price may go to 61.8. Maybe price may go to 78.6. Maybe price may go to 88.6. But how do we know if price is going to find possible support in these areas? Is when we see a change of character in these levels, right? When we see a change of character on these levels, and you see it on the smaller time frames. So don't get confused as far as identifying your structural levels based on fibs, and don't get confused because most retail traders, right, they'll see the 38.2, right, and price will go up and break 38.2. In your mind, they're saying, oh man, structure has changed from an uptrend to a downtrend. And now they'll start looking at this as a lower low, right? They'll start looking at that right there as the lower low, and they'll look at this as the lower high. And guess what they're doing right now? They're like, oh, the trend has changed. The trend has changed from an uptrend to a downtrend. Oh, guys, let's sell it. We're selling down. So while they're selling, the market does this. And now they're confused. Okay. They start selling and now they're confused. But people who actually trade and understand swing highs and swing lows and fib ratios, they might take advantage of this sell, right? But they might take advantage of the sell and monitor this sell as long as it's not breaking the previous swing low. So, or they might say, you know what? I might sell this from 38.2 or wherever 50% to, I might sell it from 50% to 61.8. If price doesn't change character on 61.8, I might hold my sell to 78.6. If price doesn't change character at 78.6, I might hold my sell to 88.6. Once price start changing character at 88.6, I'm out the trade. And now potentially, potentially this could be the swing low to help break this high. Okay. I know that was a lot, guys, but I think I did the best to explain that because that is something that I struggled with back then. So the main takeaways is just pretty much you want to understand where you're at as far as your fib level, which is actually structural and which is not. You want to understand, right, if that fib level breaks the previous high, now we can say that fib level is our swing low, right? So for example sakes, if this 38.2 was the trend to break this, right? Now we can say when price finally comes down here and breaks 38.2, now we can officially say the trend has changed from an uptrend to a downtrend. Okay. Now, here's the thing. On this example, if price created, if 38.2 was our swing low to create this high, right? If 38.2 was our swing low to create this high. Okay. This 38.2, we have to reset or reposition our fibs now. We have to now reposition our fibs. This 38.2 this 38 point, man, what the hell? This 38.2 now becomes 100%. And this next high now becomes 0. 0%. And we'll just be doing the same thing over and over again, tracking the next, right? Tracking the next structural area, tracking the next swing low. So it's just all repositioning. Once you create a new high, you reposition the that last high low as your 100% and then new high as your 0%. And your goal is to track the next structural level. Okay. Let me take this out. Okay. So in this case, price created our high, right? Price created a high. This now officially becomes our swing low, quote unquote, our high low. So we also know that when price breaks this area, structure has changed from an uptrend to a downtrend. This 88.6 now becomes our 100%, and this this high now becomes our 0%. And now all we'll be doing is just tracking the next structure level based on our fibs, right? Then if price does this, if it finds no, that's ugly. If price finds let's do it like this. All right. So if price finds all right, if price start creating patterns here, as if price start creating patterns, you automatically know, okay, this could be 61.8 or 78.6, right? It might give you a double bottom, right? And start making its way up here, right? So price now created a new higher high, okay? This 61.8 now becomes 100% because right now all you're doing is readjusting your fib levels. The high now becomes, that new high now becomes 0%, and we're tracking the next structure level. And now this right here becomes your last swing low. So meaning if price breaks here, the trend has changed from an uptrend to a downtrend. I know this is going to be new to you guys. It's going to be confusing, but I promise you, I am breaking this thing down to as simple as you can make it. I encourage you guys to just watch this video over and over again. This example, like this right here, is really Fibonacci 101 plus more, because I now added swing lows to this example, and I've never taught it this way. I added swing lows because back then this was the mind fuck right here. This used to get me a lot, right? I'll see the lower high and I'm selling, thinking we just broke structure because price broke 38.2, but the whole time price was just getting a steeper retracement. This is a rule of thumb on here. If price finds support on a structural level, price finds support on a structural level without breaking the swing high, then there's a possibility for price to pull back further to another fib level. Okay. If price finds support on a structural level without breaking the swing high, right? Without breaking this swing high, then there's possibility that price might pull back further to find another fib level. So since this right here, this high right here wasn't higher than this, right? Even if this, guys, even if this, all right, yeah, let's do it like this. If this high isn't higher than this high, price is going to pull back steeper to a different structure level. If this high is equal to this high, this will be considered a breaker structure. Say that again. If price creates the same equal highs, right? If this 38.2 went up here to test the previous swing high and it breaks 38.2, structure is broken. We're now going from an uptrend to a downtrend. That is a secret sauce right there. If price finds support on a structural level and creates an equal high with the swing high. If price finds down cycle. The structure level and creates an equal high with the swing high. Then high and then breaks the structural support level that it came from, then we have a breaker structure. Okay. Do you guys understand what I just typed? Does anybody understand what I just typed on? Nope. Huh?
Most of it.
Do you? I'm saying you may not understand what, but you may not put it all together now. But do you understand what I mean when I say this?
Yeah.
Okay.
Grasping it,
Yeah,
trying to, piece it together slowly.
Yeah, it'll take a while to piece together, but as long as you guys are kind of understanding it now. Okay. Yes. So if price finds support at a structural level and creates an equal high with the swing high that we're trying to break. All right. Hold on, we're swing high and the breaks. Okay, and right. With the swing high, if it creates an equal high with a swing high and then breaks the structure support that it came from, then we have a breaker structure. But if price finds support on a structural level without breaking the swing high, right, meaning this high right here was lower than that high, then there's possibility that price will pull back further to another fib level. Man, it's trash. So another fib level. This is very important. All right, I'm gonna stop here for today. This is because this right here, what I explained right here, I put 2 days in one, really, because I'm not showing any examples. But this is a very detailed, basic market structure with Fibs video. Okay, so what I'd like for you guys to do is study this right here, like study this video, I just want you to understand this framework of looking at fibs. Then the next day I'll show you guys what it looks like on TradingView. I'll show you why it does these things on these fib levels. But I think the most important takeaway when it comes to trading, guys, it's these two right here. These are your main takeaways. But like very crucial to your trading, right? This is us applying fibs to structure and understanding our swing highs and swing lows and understanding where we're at. Okay, so I'm gonna download this in the PDF, send it to you guys as well, put it on a Telegram group, so you have this notes while you're rewatching this video. Any questions or concerns? Was this a lot? Was this a lot today? This right here?
I don't think it's a lot if you grasp the other concepts.
Right. Okay. You see
For
how
me,
go ahead.
Yeah, I was gonna say for me is just understanding the swing highs and things of that sort. Like I feel like if I get that down packed, then this will probably make more sense to me. But essentially, I see what you're doing.
Okay, gotcha. Awesome. I'm trying to piece it together, piece by piece. So it looks like we'll have to keep revisiting this swing high, swing low, because that right there is it's another crucial part of the market. Understanding the swing highs and applying it to the fibs. So we'll spend a lot of time going over, doing more examples on swing high and swing lows, and I'll try to give you guys different variations to where now we're looking at uptrends and downtrends.
Okay.
So you can kind of see both angles. But let me stop this video here.